Good day, all. Ira Epstein with your Spider ETF stock market wrap-up. And this wrap-up is for Monday. It is D-Day. Remember the norm, the invasion. Yes, it is D-Day, June 6th, 2022. I want to ask you all to do a favor. If you're watching me, hit the subscribe button. It makes it easy. As I put these out, you get notice that they're there. You don't have to worry about me getting emails to you, and you get all of these. And if you like them, of course, I always love the likes. If you don't like them, don't hit that button. I apologize for not this weekend putting out my weekly review, and the reason is I took some time off. It's that simple. It's summer. Every now and then I take time for myself. I only work 12 hours a day, 5 days a week, and then I work either Saturday about 6 or Sunday. I put in the hours on Saturday, did my paid subscriber videos. They were all out Friday night and Saturday morning, and then I elected to play hooky and have some fun for myself. So apologize, but I will be doing that from time to time. I'm even going to take off some time in July, but my paid subscribers will continue to get, even when I'm away. I put out my research, keeps me sharp, helps them with what I'm doing. So everything comes out that way. Now, so let's talk about where we're at. I believe, could be wrong, I still believe we're firmly in a bear market. I don't believe that the market is priced in all the worst. I know that that's what the TV analysts like to have you believe. I'm still of the opinion we don't know where we're at in the inflation gauge. And Larry Summers seems to think inflation's closer to 10%. I'm watching others that think, hey, the Fed's got a long way to go to get themselves to the point where they're neutral, let alone ahead of inflation in terms of raising rates. I did a piece today for Bloomberg on their TikTok about the impact of running off the balance sheet. And I'll give you the gist of it. If between right now when you begin the runoff, which is right in this area, and we go the whole route through 2023 and we take off $1.5 trillion, theoretically, that should be worth about 1 full percentage point on the interest rate scenario, lifting it by 1 point. We don't know that we'll go that far. Nobody knows that the Fed's not going to go 50-50 and inflation suddenly looks as though it's sinking back. They don't have to go. They can go quarters for a little bit and then they stop. The big fear is pushing into a recession. And there's not one person that knows if we're going to get a hard landing or a soft landing on this. The guesses are there. They're no more than guesses. We're not far enough into all this to have an idea as to what is going on. So when you get rallies like you started off today, I watched all the stock markets open because I've been wanting myself to get out of a few things. And I've been waiting on this rally as it's been coming. And today was when I was pulling the plug, using the rally to come out. A lot of it against Bollinger Bands, as you can imagine, and we were getting them. I knew that today was the Apple event, so you're waiting on the Developers Day to see what happens. Apple got an early pop, and then by the end of the day, I wasn't that impressed. I mean, it gave up most of the day's gains. That's the way that I look at it. Amazon had a stock split 20-for-1. Normally, you're up on the day that occurs, and that's what's happening. Those are just the norms that you look for. Tesla up $11. And by the way, for Twitter, the state of Texas is joining in, and all of a sudden they're asking Twitter about these bots. How does that work? How many real fake accounts do you have? The state of Texas can do that. They can do the work now that they've joined in for their good friend. And where is his Tesla plant? Oh, I forgot. Where's SpaceX? Dumb me, Texas. I wonder why Texas all of a sudden decided to join in on this. It amazes me. Okay, Apple. So Apple's announcing new products, which is great. They're going to have a lot of new ones. They'll make our everyday use of Apple products that much better. There's people that don't like Apple, but for those of us that like Apple, it's there. But it didn't act all that good. And very frankly, if it gets under 144.46, you will look back and say, oh, that was a bear market rally, and the market's resuming its downtrend. When you look at moving averages, this is in blue, is the 50-day moving average. This is the 200. Last week, there was a lot of press on this as the market, as you can see right here, not there, watch, got underneath that. When that occurs, it's normally a bearish sign that the market's about to make a lower low. Where's that low? Is it back down here? Is it going to get a thrust down? Well, that's always for the chartist the hardest thing. I know where I think it's going. If it takes out 144.46, if it takes that out, why not go back to the Bollinger Band, the 136.57 level? That's an $8 to $10 break. I'm not saying it'll be easy to do. Apple's got a lot of good things right now going for it, but we quickly forget all the good when we start getting nervous about the Fed. And this is the 6th, I think it's the 14th, that we have the Fed announcement. They're going to go 50 basis points. I am confident that the minutes are going to show them being very hawkish going into July, and that set of notes, the July notes, which haven't obviously taken place, will be the ones I'm interested in. Do they think they've made headway? Do they think they're not making the headway? That sets you up for whatever September is going to bring in on. That's where I'm at. So I see an overbought market that's had a rally, didn't even have the power to get to the Bollinger Band. The bands are narrowing in. As you can see, they're nowhere near as wide as they were here. You've had a bearish crossover. The bias is up since the market's over the 18-day average. The trend is up since you have a pattern of higher lows, higher highs, and it comes unglued if you get under 144.46. In AMC, how do you do better than what Top Gun is doing and the stock is still falling? I'm bothered by that a lot. Now, it's not a bear signal, it's just no bull signal. Lower low, higher high. You know the numbers. You read them as I do. They were out today again. This movie has done wonders for Tom Cruise, his development team, for movie theaters that are showing it. And we're not seeing that there. Now, Jurassic Park is right behind it. And then for the kids, Toy Story is coming out right behind that. This is the summer. If this stock can't make a big move now, it isn't going to. Worse, if it starts taking out these lows, you go into no man's land to the downside. Just a fair warning. I am not a fan of movie theater stocks. It's that simple. Having owned one. Higher high, lower low. Are we going to embed? Okay, that would be interesting, wouldn't it? So it takes 3 days in a row for the red and the blue to be over 80 to embed. You have 2 in a row now. That means you're at your most overbought status level. Will we be up or down tomorrow? That's going to determine what this market's going to do. You stepped out of the uptrend today, right against the upper Bollinger Band. I think the pros started taking money here. Not today. I think 3 days ago, the combination of the 100-day average and the upper Bollinger Band was a sign for, I think, the pros to say, so long, thank you for that rally while the rest of the market was coming apart. In Disney, what the heck's going on here? You would think Disney's going to get that echelon of people that say, hey, the kids are going to go, the families are going to go, we're only at June 6th, the parks are going to do well. Markets don't wait for the earnings, they anticipate them. I don't get why this stock isn't performing. I'm definitely concerned. The trend is down, the bias is up, and you're working off a market condition that is now out of being overbought. If I go back a day, if it'll let me do that, let's just see here. By the way, I have my new magic wand. There we go. It came in today. We're going to program it for me tomorrow. But let me get back. Here's Disney. So as you come back with this is a market that right there was overbought. Any number over 70 is overbought. Today the market got away from that, as you could see. Okay, but that's not a reason to get bullish just yet, especially with the fact that lower highs, lower lows. XLF. I've been looking at this and telling traders that have called me on the financials, I think you take some money off the table here. You've had a nice rally. You've come from 32. You've gotten back to the upper Bollinger Band, and it's not able to poke through that. Not at least yet. I don't like what I'm seeing. In XLI, I like the materials sector. I believe China's going to be ordering goods left and right. Yes, as the factories get going, they'll use up supplies that are on the ground that came into the ports while the factories were shutting down. There's a lag between the factory shutting down, materials at sea still coming in, the materials that they need, iron ore, things of that nature. As they get through that, new orders will start coming in. So I'm liking what I'm seeing here. I'd like to see it embed. If it does, we'll get a bit more aggressive here in the discussions. In the semiconductor, well, this is a little bit suddenly looking like, if we can get back another chart or two right here, like Disney gets up and it just doesn't have any pizzazz. Look at how similar these charts are. Are we going back to the 18-day average to figure out what to do? We might. There's certainly nothing bullish here. Where did it run out of steam? On the first challenge of the Bollinger Band. You gave up nothing by coming out there. That's what I teach. It's often the case that happens. In the home builders, how do you like this one? This is a surprise to me. If you were to ask me all the charts I'm surprised at, this is it. If we take a look, both numbers, when did we start the embedded process? Now stay with me here. Not here. Both numbers are not over 80. Let's see if it'll, come on, not there. Day 1, Friday. Day 2, today. If this market embeds until the red line closes back under 79, for whatever reason, it's going to attract buyers. I don't get it. I think that what's going to happen with the Fed, the QT, the quantitative tightening, with the raising of, in June, a 50 basis point hike, I have a hard time fundamentally understanding the rally. Doesn't mean that I'm right, because I don't understand it. But as a chart technician, yeah, I'll be probing the long side until that embedded reading is lost. It's not here yet. Today's a Monday. We had an up day. I think we're going to have a down day tomorrow. Energy sector, fully embedded, still powerful. Now, you're going to see a couple of things in the news right away. Texas has got a new problem. The heat is returning in a massive way. They're going to test the grid, and they're going to test, can it handle the demands? What are corporations going to do? Do they shut down? Remember the prices that went up? I don't know how many fold. It went crazy. People that were paying like $60 a megawatt, I'm making this up, were suddenly paying $4,000. I mean, it went crazy. So you've got to be careful. We don't know what this means. It's going to be a problem for it. GLD, higher high, lower low, no trend, came back to the 200 and the 18-day average. Markets don't get more neutral than this. It is void of a trend. Didn't even make it to the upper Bollinger Band, and momentum turning down. I have no idea what that's trying to do. I understand GDX, because as the market was over here and was trying to lift, I kept saying, and I said this to my morning subscribers, I'm like, please don't get caught up in trying to buy this market. It doesn't make sense. You're getting into the Bollinger Band, the 200-day average, the 100, you're overbought. You're using all the power up, and that's pretty much what the market's been doing at this point. In copper, well, need I tell you, down here, when the market was in momentum over in this area and price was here, Shanghai was coming out of the lockdown. And I said, you got to get to the long side of this market, because it's going to pick up just because of the psychology before the demand for the actual product. And it's a classic case as to how that actually worked out. AGG, I don't want any part of anything to do with Treasuries on the long side. I'm a committed bear in this market, for all the reasons that I've handed you over and over. First of all, go to the weekly charts. Not one of them tells you to be long. So this was a short covering rally that didn't do anything on the longer term charts. And the market has given everything up. It's probably got a ways to go back to the downside. In the process of that, you might give the dollar a temporary boost and drop some of the currencies, such as the euro. Could happen. But I still like this market from the long side until the red line closes under 80. And I realize there's two schools of thoughts. The schools of thoughts are this. The dollar was the first to the party. All the rest are coming on. Example, the European Central Bank, I believe they have a meeting this week. Now, the RBA, Reserve Bank of Australia, is meeting right now. They're supposedly going to go another 25 to 50 basis points. We'll call it tonight. It'll be their morning, so we'll see what they're going to do. And then I would think that the question in the ECB is they'll probably play a conservative and go quarter-point hikes, but banks are coming on, and they're all raising rates. So is that bullish or bearish the dollar? That becomes the question. It might be actually bearish. The others are the exciting story. They have more room to go than us because we're further down the road. Does that make sense to you? And if they see us back off, they will not go as far as you think. We are the big dog in this pond. So it's what everybody looks at. Keep that in the back of your mind. As I said, I put out my SPDR ETFs for you, and it takes a lot for me not to put them out. I'll let you know. I'd have to be traveling somewhere where the time element doesn't make sense. But Monday through Friday, about 9 in the morning, I'm recording this Central Time. These are just some of the markets. I rotate them all the time, forever. You write me. I ask you all the time, write me. Tell me what markets you want me to cover. In fact, do it now. On YouTube, write down the ones you want me to cover. I don't have to cover Apple. I can move on for starting tomorrow. I want to throw it on because of the Developers Day that I saw. But these are just some of the markets that we cover. I give you specific buy here, sell there, do this. Here's your exact stop. Here's the reason to do it. And then each Saturday or Sunday, sometimes it's Sunday, I will put out for you the weekly video where I cover all the weekly charts. Now, bonus video weeklies, yeah. Sometimes I'll put them out too, where I have an idea, I'll throw it out, I'll bring up a stock, take it from there and give you an idea. I am a pro. I've been doing this a long time, since '69. I've owned my own stock firm, commodity firm, been investment advisor for people. They call, I give them ideas, I've managed money. I've got the experience level. So if you're looking for somebody with gray hair that's been in these bear markets, still has his mind about him, I might be that character. Just go to iraepstein.com under the word research, or you can just take your cursor, follow it up here, give a click right at the very top. You'll see the icon. It explains everything there. I'm Ira. You have a great trading day.